Chapter 10. The Market's Backers, from Lost Crowds to System Gatekeepers. Introduction. From misguided crowds to the gatekeepers of an era. In the last chapter, we talked about how companies like Amazon and Google are not just businesses. They're anchors for the US dollar. Their market values, $1.8 trillion, $2 trillion, aren't about profits. They're about function. These giants help stabilize prices, shape global trade, and act like digital vaults for the dollar. But most people don't see that. From truck drivers in Texas to casual investors in New York, many still follow Warren Buffett's philosophy. They believe that a price-to-earnings ratio of 25 is safer than Amazon's 40. They don't realize that Amazon's pricing power matters more to the dollar than Coca-Cola's dividends ever will. If you're the one printing money, like the Federal Reserve, you can't rely on public sentiment. You need institutions that understand the bigger picture. Institutions that can protect the companies that protect your currency. That's where index funds come in. Part 1. The Lost Crowd. Old thinking in a new world. Imagine a quiet morning in Omaha. Warren Buffett sits in his office sipping a Coca-Cola and reading financial statements. He values cash flow, physical assets, and low PE ratios. Coca-Cola fits that model perfectly, and millions follow him. They see safety in stable companies. But when they look at Amazon or Google, with their high PE ratios, they hesitate. To them, those companies seem overpriced. What they don't see is Amazon lowering TV prices by 12% over 2 years, reshaping logistics, and helping keep inflation at 3.2%, even while trillions of dollars are being printed. Buffett's model worked in an industrial era, but today, currency strength depends on digital infrastructure. These tech giants are not just profitable, they are vital. Part 2. The money printer's lens. The need for a market backer. Now picture the control room of the Federal Reserve. You've printed $7 trillion to prevent collapse. Your mission? Protect the US dollar. Amazon, Walmart, and Google are your sentinels. They absorb the money, stabilize prices, and help the system run smoothly. But retail investors panic at every headline. They dump stocks during crises, failing to see the larger role these companies play. You need someone else, calm, informed, and loyal to the system. Someone who trades not on emotion but on structure. That's the role index funds were created to fill. Part 3. A revolution in fund management, the rise of index funds. The idea of pooling money isn't new. Dutch merchants did it in the 1600s. In 1924, Americans got their first taste of mutual funds. But those funds were still active, charging high fees, picking stocks, and often underperforming. The game changed in 1976 when John Bogle launched the first index fund. It didn't try to pick winners, it just bought the market. Over time, fees dropped from 0.5% to as low as 0.03%. By 2023, index funds owned 20% of the S&P 500, holding giants like Amazon, Apple, and Google. As the Fed injected $7 trillion, these funds quietly absorbed the flow, pricing stocks not for earnings, but for their role in the system. Part 4. Surpassing banks, value investing, and the crowd. Traditional banks used to be the financial giants, but after new regulations, they had to sit on reserves. Index funds didn't. They deployed capital. Between 2009 and 2023, the S&P 500 tripled. Index funds like SPDR S&P 500 delivered strong returns without picking a single stock. They also beat Buffett's style. While he looked for undervalued gems, index funds simply held everything, letting scale and structure do the work. And they won on cost too. Fidelity even launched a zero-fee fund. BlackRock helped the Fed manage bond purchases during COVID, quietly steering markets. Part 5. The backers, invisible power and a new ecosystem. Index funds now support markets in 3 big ways. They stabilize prices. When Amazon stock dropped 5% after war news, Vanguard likely bought millions of shares, calming the fall. They hold capital. With $7 trillion locked in equities, they prevent inflation from leaking into consumer goods. They concentrate influence. BlackRock, Vanguard, and State Street control $25 trillion. With one move, they can sway entire markets. These funds also own huge portions of tech giants, influence mergers, and steer sentiment with AI platforms like BlackRock's Aladdin. Part 6. Reflection. The backers in the endless stream. So who supports the system when the public doesn't see the full picture? Index funds do. They price with purpose, trade with discipline, and preserve the system quietly. They are unelected kings of capital, holding up the dollar in silence. But here's the question. What happens if trust in the dollar fades? Like in 1929 or 2000? Who supports the supporters? That's not a question we can answer here, but it's one worth asking as the stream of finance continues to flow.